Hey YouTube, Jason here with DayTradingFearless. Welcome back to the channel. If you're new, welcome. This is where I talk about anything money and stock market slash finance. So let's make sure you hit the like and the subscribe, and let's get into today's topic, which is we're going to talk about the free commission wars that are going on between now Robinhood, Webull, who are the other guys, TD Ameritrade, Charles Schwab, Interactive Brokers, and E-Trade so far are the six big ones. And it's going to be interesting to see if actually Webull and Robinhood get bought up by maybe a TD Ameritrade or an E-Trade because of what's going on with the commission, because people left the bigger brokerages who actually have a lot more sophisticated software to go for the free commissions, but now they could kind of go back to your TD Ameritrade, trade with them, and pay zero commissions. Now, why is that a good thing? I believe it's a good thing for a couple of reasons, and also a couple reasons why it might be a bad thing. But let's get into the good side. If you're a small trader, if you're a beginner, if you want to scale into positions and scale out, it's actually really good, because if you're not paying commissions every time you want to jump into a trade, but you only want to buy maybe 5 shares or 10 shares of SPY or Apple, it makes it now feasible, because you can literally buy, we'll say, SPY at $2.90, okay, and sell it at $2.91 to make $1 on one share and not have to worry about commissions. Before, you need to pay maybe $10 or $15 commission round trip per trade. Well, if you bought one share, you need the stock to move $15. Well, now essentially you don't even need the stock to move. It could go up $1 and you sell and you make a small commission or a small profit. So that's really good for beginner traders. Now you kind of don't have to necessarily be reliant to learn everything on the demo. You can actually go to a live account, but trade a very small amount. 1 share, 2, 3, 4 shares to understand, but you have real money on the line, which brings out the real emotions that a demo account doesn't do, to help you actually build to be a better trader. Couple other really good reasons these small commissions or with the zero commissions is you could scale in. Let's say you're looking to buy Apple, right? And Apple's at $2.25. Well, maybe you say, hey, let me buy 1 share at $2.25. If it drops to $2.10, I'm going to buy another share or 2 more. If it keeps dropping, you could buy it and dollar cost average in, and then over the long haul, hopefully it goes back up above your $2.25. And then that 1 share you bought at $2.25 is break even, but the ones you bought below are all now in profit, and you could scale out. So there's a lot of different strategies with these free commissions that you could do. Now, on the bad side, and we will see how it works out, Robinhood, Webull will probably eventually get bought up, because their whole gimmick was free commissions. Well, now if everybody's doing it, why would somebody leave a TD Ameritrade or Charles Schwab or somebody who's already with them go over there? Now they all might go back and put their money in their bigger accounts, okay, and be able to trade with all the great technology these companies have built. Now, with that being said, that's less revenue, so their share price goes down, right? And that means they got to do cutbacks. They got to find the money other places. Do they start cutting back on trading support? Do they start charging fees in other places? Hopefully not, but time will tell. But as of right now, Go out, if you're brand new, if you're a new trader, if you're a small trader, go out and trade 1-2 shares and start to learn the market, right? Until my next video, thank you for stopping by, and we will see you next time.